Welcome traders, this is TradeAlerter from ForexSignals.com. I'm coming to you on Monday the 1st of September. Now, just as we are screening this, we just had some data out from the UK that was worse than expected. Now, most of this is, this was actually the manufacturing PMI. Now, it was expected to dip because of some of the effects of the Russian crisis, and that does affect a little bit of confidence in businesses. But before we had the data come out, we had the pound rally back up towards this 166.40 level. And since the bad data has come out, we've seen a continuation of strength. Now this is telling in the fact that we were waiting for this sort of price action last week. We're talking about the pound a lot because we longed for a little bit here. Now, just before the data came out and into the rally, I sold some, effectively hedging up my position. And I'm happy actually to remain hedged here. While we may actually go on and test the 200-day moving average, 200-day moving average comes in around about 166.88. So around this level here. Now the issue with using MetaTrader is that because of some of the data sets that you're going to use when you use this software, you may not actually get that same moving average number, and this is pretty important because it can cost you 10-15 pips if you don't get that exactly right. Okay, so what I want to do here is I'm going to put a 200-day moving average on. Just see where it comes in on the simple. Okay. This one comes in at 92. So not too bad. But sometimes definitely it can be off, especially if your data set of your provider only goes back, say, 100 days or 150 days. So just be a little bit careful on that. So this one's only about 4 pips off. Obviously, as well, the settings that you put your moving average on, that's very important as well. I like to use a close. Okay, so when you have bad data into a relief rally, it's usually a good idea to get neutral, and if you're long, to close that position, because while the immediate reaction may be a continuation because there's a few people who were caught short, the longer term players are probably going to be using any sort of level close to the high of the previous relief rally, maybe 166.45, as sort of a selling level now, bringing down their levels. And anytime you see that, you're probably going to see, if there's been a relief rally, you're going to see sort of that any sort of crosses where it's been outperforming also start to come under pressure. So that adds to that. So in particular, one we're looking at might be, say, the pound New Zealand or the pound Aussie. The one I want to actually get long on still is pound shift. Now last week on Friday I wrote a report about the pound Swiss. So Euro Swiss has been something we're looking at because it's going back towards that 120. The pound Swiss is actually Euro pound, yeah, with also the Euro Swiss movement. So what I mean by that is because of that peg between the Swiss National Bank and also they said that the Euro Swiss rate at 120. You're seeing that the Swiss moves pretty much, correlation of 0.9 with the euro dollar. Okay, so if the euro goes up 100 points, then the dollar Swiss goes down, say 80 points, or whatever the 1% move will be. Yeah, so percentage moves wise moves the same. While the Euro Swiss doesn't move, that holds. When the Euro Swiss moves, then everything's extenuated. So the pound Swiss, okay, back when it was previously at 89, was up at 153, say 40. Okay, but now that the Euro Swiss has fallen down below 121, you'll see that the pound Swiss, when the euro pound is at 89, so always check what I'm talking about here. Is the euro pound is at 79, sorry, 79, not 89. When the euro pound's at 79 last time, so here, July 21st, okay, you saw it actually around about 153.40 to 154, but here, the pair's actually only at 152.60. Right, so that underperformance is because the Euro Swiss has changed. Yeah, has fallen. Now, we're actually long Euro Swiss here because we're expecting some sort of relief rally or some sort of peaceful resolution, some sort of stern warning from the Swiss National Bank. Over the weekend, we heard the governor, Jordan, come out and say the 120 level is critical and we will be open to further measures if needed. Now, what he's talking about there is that the ECB keeps on changing its monetary policy, easing it further, and this allows the Swiss National Bank to ease their monetary policy further, and it also helps support the Swiss economy to sort of keep in line to make that 120 level a bit more defendable. And the way they'll do that is probably put in negative rates, and they've done that before. And if they put in negative rates or even talked about it, that's probably good for around about 50 to 100 points rally. And that's what we're looking at to get out of this trade and sort of move on from this Euro Swiss. But the pound Swiss as well, if we get any sort of further pound weakness and we get the pound Swiss moving back towards 152, say 20, I put a limit order in here at 152.21, then we'll be looking at that level as a nice level to enter, and hopefully we get an extension back, towards the highs there, 154, 155. Longer term, and it's very important to check the longer term. We're very, very low still. Yeah. So this recovery in the UK economy, let alone raising rates maybe early next year, let alone the Euro Swiss potentially having a rally back towards 122, probably 123 once the Ukraine crisis is over, is really going to open the door here for the pound Swiss to outperform. So I'm targeting 160, 170 over the next 6 to 12 months, and that's one which I hope to make a lot of money from. The other one which I would be playing long as well is pound yen. Pound yen still has a lot of recovery left. If we were to break above the 175 towards the 180 level, this comes in previous resistance 180. Break above 180 really does open up a big rally towards 193, and that's sort of price action that can make your whole trading year. If you're lucky enough to get involved early. Right, so hopefully as this goes along, we'll be doing these daily videos, we can get that sort of price action, we can discuss that journey into a long trade that is targeting 1,000 pips, which is a different sort of trading, but if you can get used to that sort of trading, then that's where you can really make some money in this game. And that's to do with just the outperformance of the UK economy versus Japan economy going forward the next 12 months. Right, in regards to this week, it's huge. We've got NFP, ECB double. ECB, I'm in the camp where you're not going to see movement. Okay, so I don't think that. I think they'll leave the power to dry here, mainly because they've done so much lately that they probably want to leave it a couple months to see it filter through. What they may do is have the dovish talk, but I think still the market will short cover. Alright, so especially because it's so strong, I think we're going to see that recovery back up towards 132, maybe 133, and then this NFP, that's very important. If we see another strong number like we did last month, we're probably going to see a move here across the board for the US dollar as analysts get a bit more aggressive in moving up the timeline for the Fed. It's getting harder and harder for the Fed to delay action. So they're almost finished tapering. They should finish tapering in the next 2 meetings, and then you're going to see pressure on them in the first quarter. Now that, even talking about that, will get dollar yen rallying, and if the euro is conducive to selling still, back below 130, makes it a lot harder to play the pound. but I'm looking for the pound to hold its ground and hold that 163 to 167 sort of range trading, depending on the UK data versus the US data for that particular week. All right, well, good luck with your trading, guys. Come into forexsignals.com. There's a free trading room there. You can use that to chat with me. My name is TradeAlerter. You'll see the other traders that do have there that you can follow if you like on an MT4 account. But good luck with your trading, and we'll be back tomorrow.